Hello and welcome. In today's conversation, we will be taking a look at Estateguru's performance on the first half of 2025. We will look at the trends, results, and key facts, not just the numbers, but we'll dig deeper and look at in the context of Estateguru's mission, the trends, and investor confidence. Today, I have Michael Stam, CEO of Estateguru. Hello.
Hello.
Please walk us through just the general facts to get us acquainted with the topic.
Yes, of course. So 2 years ago, I started with Brother. We changed our strategy. We went from this high growth business model to sustainable, which also meant that we need to be self-funding and being able to provide profitability, which is important as a company, because when you have a strong basis, you can then continue building the product and the service for the customers. And last year we achieved this by reaching the profitability as a company. And our aim for this year has been also continue operating profitably as a business, but at the same time continue providing good investment opportunities for the investors. So key pillars for this year has been in the first half as well, have a good quality portfolio, bring good quality new opportunities for the investors, monitor the portfolio and ensure and clean up if needing from the previous period, and continue ensuring as a company to be sustainable.
Okay. Can we now zoom in on only this year and the first half, the performance of the company? Can you give me some insight? What has been happening? What are the developments?
So for the first half, we have continued to provide funding in the Baltic for the developers so they can actually build the cities and build new apartment buildings, new houses for the communities. So we have funded more than 30 million worth of loans, in which results in over 100 different projects in the Baltic region. So for the investors, this has meant that they have earned more than 4 million worth of interest returns, yielding them around 10.5% yield on a yearly basis. So we are happy about this because this means that we are able to beat the deposit levels. We are most cases able to beat the bonds and other investment vehicles what are available on the market in the sense of providing real estate backed first rank mortgage loans for our investor community. So when we look also wider and how we have performed with our portfolio, we have brought back over 40 million principal for the investors. So, and what we see, investors continue to reinvest it back to the platform and continue believing in real estate backed loans. So, and what is also important is we are not just funding new deals, we are actively working with the portfolio, and if there is something happening, we are also making recoveries. And with the years, we have received extending knowledge in doing this. So with the first of half year, we have also been able to secure back over 6 million worth of defaulted loans. And this shows that our business model works in different aspects, even when maybe loans don't go as expected. So these are maybe the key numbers to bring out from the first half of the year.
Okay, so these are all positive developments in my opinion. If we now zoom back a few years ago, these changes and the current state of the company, how does it fit into the broader picture if you look, a few years back?
So as said, a few years back, we were high growth. We were more maybe spread around in Europe. We came back to the Baltic because this is where we have been the longest. We have most extensive knowledge of the loan origination, and this strategy has worked well. When we look our health of the portfolio, then for example, 2023, we gave out 100 million worth of loans. Out of this, by now we have secured back already 92 million, so almost 92% is repaid back to the investors. 3 million stays active, and the ending is somewhere in this year, and there's a 4 million defaults, so which results in 5% or even less of defaults, and this shows us a healthy portfolio, how we want it to be. And when we go year later, 2024, we funded 80 million. Again, or over half of this is already repaid. And knowing that the average maturity of the loans is 12 to 18 months, then we see this progressing really well. So the changes we have done there, these are actually resulting in the portfolio, and I'm really happy to see that the portfolio of last year's is performing really well and the investors are getting good returns.
Give us an overview of market trends that you have seen in the past 6 months, maybe by country, or you have some general ones that you want to share with me.
Overall, I think when we look real estate, Europe is still in different situation country-wise. It's still maybe recovering overall, and not so high growth in many areas. And we see also differences in Baltic, for example. We see really booming in Lithuania, for example. That's why we also hired a new country manager there, because we have a big belief in Lithuania that we can actually take more market there and be more active as a company from the funding perspective. In Latvia, there's a little bit different trend happening. We see actually developers from Estonia and Lithuania going there and developing, maybe not even local so much, but it's still also booming. The prices are there lower to develop and yields for the investors are better. We also see the investors there becoming more active, and maybe most stable conservative is at the moment Estonia, where it's developers are developing, they are making good projects, but not actively adding too many projects simultaneously. So it's kind of more steady looking growth when we consider Estonian market. Overall trends, what are affecting us is that Europe is going down. So this means that some yields for investors from some of the investment vehicles is going down as well. They are still looking for the higher yield. So this means that and what we see is that they are coming back maybe more to the real estate and we have seen the raise in bond notes where they are investing into real estate backed projects and also with the loans. So these are maybe the changes what we have seen in our recent 6 months.
Okay, thank you for the overview. It's clear that you're a nose up in the path and doing great things, and that there's a good momentum going on for the future. Now we are moving on to the next part. In this part, we are diving into the heart of Estateguru's operations, the loan portfolio. We will cover the active markets where loans are still issued and non-active ones where the focus is on managing and recovering assets. For this part, I am joined by the Chief Risk Officer, Andres Lutz, to explain all the situation. Can we start off with you explaining to me the credit policy and how the loans are selected in the first place?
Hello. Credit policy is our group-wide mandatory policy where we basically have put in all the criteria for origination. We have divided this policy into 3-4 parts where we start with the desired borrower rules. So basically we are concentrated on SMEs. We only lend to companies which are active mainly in real estate sector. Our first rule is that all the loans need to have a real estate collateral, and most of them have first rank mortgages. And basically what we do in this policy is that we have described for every country limits, special rules, and some specific criteria for origination. For instance, in Latvia, we have smaller concentration risk limits than in Lithuania and Estonia. We have now closed down or stopped originations in Finland and Germany. And this all we have basically enhanced into our policies during the last 3 years, where we made huge changes. Also, which has affected us is the European crowdfunding license. 2 years ago already, we started cooperation with Moody's Analytics. So all the loans, loan projects and borrower companies have risk categories, which means that we assess based on Moody's analytics model the risk of the borrower defaulting. So every loan will have a 1 year probability of default.
Okay.
And when we look at the competition, so they use their in-house models, and it is quite specific to us that or the market that we use the outsourced model, which is more objective and more proven.
Thank you. It was very in-depth. I appreciate it. Now, if we move on to the 6 months of this year that has already passed, how is the loan portfolio shaped up so far?
I would go further away and even look the portfolio during our last 2 years. So basically, when we stopped originations in Finland and Germany and concentrated only on defaulted loans, we also changed our credit policy, adjusted it even more to our core markets in the Baltics. When we see the effects, then 85% of the 2023's origination is already paid back. There is only a total of 4.5% in defaults, and next year, 2024, already 30% has been repaid. And the beginning of the year, first half of 2025, has also been performing. No hiccups, no problems, and we continue basically with the same quality that we have done during the last 2.5 years, basically.
Okay. And what the recovery situation has been in the past 6 months?
So we have recovered total of 6 million euros worth of principal. We have now decreased the default rate in Estonia to very healthy 10% in our segment, and first recoveries are now happening over the last 2 years already in Finland, where the market has been quite difficult, which means that liquidity has been very low. And now we are seeing that the macroeconomic situation has been improving, and the small recoveries are already happening in Finland. And we are now preparing also recoveries in Germany. In Germany, we have now signed at least one notary transaction, and 3 are also coming within 2 weeks. And recoveries for investors will happen probably end of September latest.
And are you on target with these recoveries, or are you surpassing the plan, or are you lacking in some areas?
No, in recoveries, the plan has been set for the whole year. And as we know that there are many parties in default management, many hiccups, many parties, then for the first half we didn't put a very concrete number. When we look the last year's total recoveries, it was nearly 15 million euros worth of principal. We have done 6 million during the first half. So I think we are in line, and we hope and we see already that the second half will be more productive.
Can you give me now an overview of the active markets? What is the situation like?
So as I mentioned, Estonia is the best performing market. We have there over 35 million worth of outstanding portfolio. Only 10% is in defaults or in recovery process, and the delays are very, very small, if at all. We are concentrating in Estonia mainly to our well-known borrowers. We have also prime market players like Everaus, Endover, Ruudusehitus, Kraus Kinnisvara, and we see that their portfolios in our general portfolio will increase in the upcoming months. In Latvia, we have the second best market, I would say, where 1/3 is only in defaults, and it's related to mainly one large project in Salaspils. And I think there we are now concentrating on smaller borrowers. The market is smaller than compared to Estonia. The project sizes are smaller, and there we have found the sweet spot that are the smaller SMEs who are doing one house per project or 2 or 3 apartment buildings, but not more. So Latvia, our target is the smaller, more flexible borrower companies. In Lithuania, we still have legacy portfolio. So out of 30 million, 2/3 is in defaults. This is my department's main focus right now, to solve these larger defaulted cases. And the market is booming there. And we have basically made adjustments to our concentration risk limits, which means that we are concentrating up to 1 million euro cases. In very rare cases, we go over that limit. And prime cities, Vilnius, Kaunas, and Klaipėda. In Portugal, we have 2 loan projects with one borrower company, and there we have agreed with them that they will probably pay the loan back end of the year, but it depends on the construction permit, the final permit. In Portugal, the bureaucracy level is quite high, and if they do not repay end of the year, then we will extend it a little bit more, but they have already a refinancing partner who is waiting for the construction permit. And good news for investors is that during the last 2 months, they already paid back 2 million worth of principal, so only 3 million euros left for the Portuguese project.
Now, let's move on to non-active markets. Can you please give me an overview of each market by country and how you're doing there and what?
So we start off with Finland, where we are now finishing our activities there. So we have some projects where we are still doing the last stages of funding to complete the construction processes. We just repaid back over 1 million euros of one performing project, and there is 1 million euros left of good performing loans. The rest is in default status, which happened basically 2 years ago when the market collapsed. And now gradually we have been in legal disputes with the borrowers and selling the assets. Currently, we recovered one large loan in Lahti city, and gradually the sales are becoming more active as the Euribor has decreased, interest rate environment is better, and we see that especially in residential collaterals, interest towards our collaterals is higher and more active. I think I can tell you that over 70% of the assets are now being sold, and we still have like 30% of the projects where we have legal disputes, where no compromise is possible with the borrower, and borrower just delays the processes. But our security position, legal position is strong, so it only takes time in courts basically to fight it out, and then we will get to the sales. In Germany, we have now only defaulted portfolio. Our last loan also defaulted there, and we have agreed with the borrower that they will repay it back end of September latest. But in Germany, as our listeners and investors know, we have invested heavily into legal disputes. Unfortunately, the bureaucracy level is very high, and the market is in a standstill, or has been ever since the Ukraine war started. And currently, there are some positive news already. And last week or 2 weeks ago, we already signed one notary transaction where the funds will come to investors' account latest in September, and 3 of them, the similar transaction will be signed during the next 2 weeks. And many auctions ongoing, but unfortunately also bankruptcy proceedings and legal disputes with the borrowers who are intentionally delaying the processes. And the German legal system helps them basically to delay the processes. But it, again, similar to Finland, it just takes time to get to the auctions and sales. In Spain, we have only one project left, which is performing, and we have agreed with the borrower that they will refinance or sell the project end of September this year. I think that they will manage because it's a prime location in Barcelona Old Town, ready 2 apartments. If they do not, then of course we will start enforcement and protecting our investors. But when we look the project and the location, then I can assure to our investors that they will repay it soon.
So now I want to go into two of the top questions that come into the help desk. First one is, why are you not showing live or up-to-date comments on the recovery projects in the platform?
Unfortunately, what we have seen is that we have many legal disputes and borrowers are using this information against us. And we want to treat and protect our investors the best way possible. And that's why we have put these generic updates on our platform. Of course, investors can approach our help desk and most of the cases we answer their specific questions there. But yes, to the public and to the borrowers who are also looking these updates, we cannot disclose more detailed information.
And another one is that why is it taking so long for some of the projects?
The main reasons come from the legislation. It depends on the country. For instance, in Germany, the process is borrower friendly, so they can dispute, they can hide, they can do everything to delay the process, and the bureaucracy and the local laws help them. And of course, currently, especially in Finland and Germany, the market situation is quite difficult, which means that the sales periods are long. So the liquidity has vanished after the Ukraine war. As the interest rate increased, then refinancing options are very limited. And that is the combination of the market situation, which basically delays all the defaulted cases. But markets where the liquidity has been very good in the Baltics, the recoveries happen on average within 6 to 8 months. But of course, there have been delays in Latvia and Lithuania also, and in Estonia. And for instance, in Estonia, the delays are coming from the borrower side, where we have private collateral owners who are disputing in the court and intentionally are delaying the process. We will win eventually, but it just takes time in the courts. And as courts are overloaded with work, then it just takes time. In Latvia, we have had many hostile borrowers who have basically tried to come against us with criminal accusations and are forging documents. So we are fighting them in the courts, and to prove that we are right just takes time. In Lithuania, most of the cases out of these 20 million, which is in default, are related to construction issues, where borrowers have done illegal construction works and their construction permits have been stopped. And this means that refinancing sale has also paused, and we need to solve these issues before we can exit. And we cannot sell without construction permits. And nobody will buy it, or if they buy it, it will be a very huge capital loss for our investors.
Having said all of that and brought out all of the difficulties, I'm sure you have some positive examples as well, where things have settled quite quickly or positively. Can you bring an example to just lighten up the air a little bit?
Yes, so what we have done in many countries, especially in Latvia and Lithuania, we have taken over properties via auctions to protect our investors, because especially in Latvia, Lithuania, the auction system isn't controlled by us. The price deductions are coming from the law. And in Lithuania, end of 2023, we participated in an auction, and we were granted the collateral to our security agents company. And what we did is that we took it to our balance sheet, found a good broker, and sold the project. It took 1 year, but we found a buyer, and also recovered the full principal for investors, and annual yield was 7%. So for this takeover, we invested our portal's funds, nearly 50,000 euros, and we only recover them when the sale happened over 1 year later.
Okay. So now talking about developments in different countries, what is your team seeing? How is the real estate market going to be within the next 6 to 12 months?
So in the Baltics, we are seeing very active real estate sector. And as everybody has seen, the bond issues related to bigger developers was very active during the spring. And we also see our pipeline quite strong. The product which we have already had nearly 10 years is working. Borrowers know it, know our rules, know what our investors like, and business plans basically are calculated with our interest rates and working. So especially in the Baltics, which is our core focus right now, we are seeing the growth volumes increasing and the pipeline to be quite strong.
Okay. So in the light of these changes and the current state of the operations, what changes are expected in the credit policy? Are you seeing that it stays the same, or are you also involving your credit policy in light of the developments in the market?
It depends on the market. For instance, in Lithuania, we have now changed the policy as we are seeing quite low quality of the valuation reports that we are receiving from the borrowers and from the valuation companies. And we are now doing second opinions in most of the cases. We have a special independent partner for that. And that's why maybe the processes are slower a little bit, but the quality for investors is higher. In Latvia, like I mentioned during the first part of our conversation, we are concentrating on smaller cases, no large developments anymore. The market need is for smaller cases and smaller loans. And in Estonia, I would say that, no major changes expected. Maybe we will concentrate more on our prime borrowers, like I mentioned, the end of Everhouse, and maybe there we will see increase of limits.
Okay. Well, thank you, Andres, for joining me today and giving this transparent overview of all of the markets and the situation within them. We are now moving on to the future. I'm joined by the CEO, Michael Stam, again to see what's in store for Estateguru in the next 6 months. As we move on to the second half of 2025, strategy becomes even more important. I'm once again joined by the CEO of Estateguru, Michael Stam. Please give us an overview of the direction and the main goals.
Okay, so looking forward, for the second half of the year, we have still 6 focuses. So first of all, as I explained for the last year, is to continue operating as a profitable as a business, which ensures that we have capabilities to provide the best user experience, continue providing good projects, and etc. Second is pillar for us is a high quality portfolio. So we keep working on our portfolio, existing ones and the future ones, that our credit policy is up to date and we are offering the best projects what are available. Third is strengthen the position and continuous strengthen position in the Baltic markets. So with these 2 first focuses ensures also the third, which is like ensuring that we can grow and take the market in the Baltic. Fourth, I would say, is the new product offerings. So we have looked into the market and we are now finalizing the EG Grow, and we have already launched it for the pre-live for the users. And I think when this webinar comes out, then we are already live and we can start actually introducing it more for the wider audience, the new product. We continue working on the user experience. So the maybe bigger thing to launch is the mobile app, which is now in the testing phase, and we soon make it available for the beta users to test. And last focus continues to be closing off the old portfolios. So we work on that, and this still remains a priority. So these are the 6 priorities for the upcoming period.
Okay, so now looking from both the borrowers and the investors' side, what is the main takeaway for them, just, like singularly from each side?
From the focus is that we are here to provide fast and flexible financing for the borrowers, and we are here to provide low risk, high yield, real estate backed investment opportunities for our investor community.
So now you've brought out some of the things that are going to happen in the short future. What is the longer strategic view on things? What are the longer goals?
So the wider goal for us is to improve the living and working environment in the cities. And we do it by actually provide community-based funding for these real estate developers who can then build this better city environment through new houses, new buildings, and etc.
Do you want to zoom in on this?
Yes, of course. So how I see it is that more and more people are coming to the cities, living in the cities. We are more closer together. And actually the quality of life in the city is defined by the architecture, how the quality is. We're talking today about A-class buildings where you have energy efficiency and all of that. And I see that we as a company can actually support this idea of really building the environments where we would like to live and have a happy life. And through providing this community-based funding, we are able to shape the city space. Old houses get renovated, new ones being built, and this is not that this comes from some business standing out, but this is like 160,000 people who are then giving their little piece to make this happen. So we see every month tens of thousands of people investing in projects in Tallinn, in Vilnius, in Riga, and in this region, which will shape the life of the future people, our children, etc. So and this is what actually excites me, that this kind of platform allows us to do. And we, in the beginning of the year, we gave out the prizes for the best projects, which were funded last year. And it was really kind of hard decisions to make. We had so many great projects. So, which eventually ended up in the top 3 was one industrial HQ, which was rebuilt in northern Tallinn. So it became, I think, 20 to 30 house with the new apartments. Old town, like from the medieval age, building was renovated and made as a new apartment building. And there was a newly built house in Kadriorg in Tallinn. We saw in the competition that new living areas are built in the urban areas of the cities in this region. So all of this is kind of coming from this community-based funding, and this is really the value what we can actually bring to the society through that. And this is, I think, the wider purpose or goal for the business.
It's great to see your passion come through when you talk about that and your eyes lit up. It's great. And we are now actually moving on to a new product that Mikkel is going to help me introduce you to. So do you want to get on and introduce the EG Grow?
Yeah, EG Grow we have already a little bit talked about, also shared some insights about. I think that, as I've said, a little bit the investing space is changing all the time. So when we started, the innovation was that you can make your own investments. Like you don't need to take your money to the bank and deposit, and the bank then uses it to lend it out to consumers, to businesses, to everyone else. But you only got your 1 or 0% return from the deposits. So when we first came, we were allowing people to invest directly into the projects. And this was the innovation at that time. So thousands of people were able to put their 50 euros, 100 euros, 1,000 euros. And with that money, we were able to collect like $1 million to fund the one projects. So you got the direct return out of that. So there wasn't any 1%, 2%, but you were able to get 10 or plus returns from that. Now, I think overall, investing has become more accessible for the investors. So you are not choosing anymore like what is a return, but you're choosing a strategy. So what do we want? If we want to have like being able to have a high, maybe quick returns, or maybe some hope of earning more, maybe I go to the stock or I go to the crypto. If I want to have stability, I go to the deposits, fixed returns. I might go to the bonds. But what we see is that investors still seek some stability. They seek predictability, that I can know that every month I'm receiving my interests. And third, they're still looking for as high yield as possible. So this led us to think also our product offering, and we came up with a new product which is now called EG Grow. So what this allows us to do for the investors is that you will get 7% fixed yield. You get a monthly based interest payments. So you don't have any delays on interest if the borrower is late or even defaults. We have for that guarantee fund, which allows us to continuously pay the interest rate. And parallel, we continue working with the loans behind it as we do on a current basis. And our track record is really good at that, at actually getting the money back and securing the investments. So this product, is something for someone who is expecting to kind of put their savings in a good fixed return yields. So you can take your hands off and see your money kind of being grown in a way that you don't even need to have active participants. So this is the essence of the product.
Yeah, I do agree with you. I think the market is saturated with all of the options and people have this kind of selection or choosing fatigue. And now you have given or created a product that is simple to understand and has fixed terms. So it's a great fit for people who want to do their own personal interest and live and work and not worry about the investments every day. Mm-hmm. Is that the group of people that you're aiming for?
Yeah, I think this kind of allows the investors to think what strategies they want. If I still want to have active participation and maybe get better yields, higher yields, there's still options that I go out and pick my own loans. Okay, I prefer this borrower, I prefer that, and I maybe can access to the higher yields. I can still set my own criteria that, okay, I want this type of loans and investment opportunities, so I can set up the auto invest, and this will build still your own portfolio with your criteria. But if you don't want to deal any of this, that, okay, I want 7% yield, which is better than deposits and in many cases as a bonds, and I want stability, I don't want to worry about, then I deploy my money there. I maybe get a little bit less return with what I could do when I do individual picks of or selections of the loans, but at the same time this gives stability that, okay, I place it and I then receive it on monthly basis. So, and at the same time, then yes, it also places to the wider pictures when investors are building their portfolios. We understand that this is not for kind of high potential growth product, which you could maybe get from stocks or going to the crypto, but at the same time, there you have all volatility, different strategies. But if you want to secure part of your portfolio in a fixed return and a high yield, then this is product for you, which is kind of where we're aiming.
Okay. And how much investments does the fund accept?
As we also need to build up the reserve fund for that, then we are limiting it in the beginning. So we are taking only selected loans to that product as well. So the criteria are available for investors to see. There will be limits, and step by step we start to increase the monthly volumes on that product as well.
Okay, and now when people want to learn more about the new product, where can they find information?
All info is available on the webpage. You can log into your dashboard as well, and then you see EG Grow. You click on that and you get more information. We have sent also info via email, and there's updates continuously going on the blog and Knowledge Hub. So all of this is available. And as we progress with the product, more info will be available.
Okay, so do I understand clearly that at the moment I cannot sign up or participate in the program? How do I know when it becomes available for me?
So we already launched pre-live, which means that you can sign up on a wish list, and many investors, or actually thousands of investors, already have done it, and they are waiting it to be activated. And the launch is actually quite near. I think when we publish this video, it is already live.
Okay. Fingers crossed.
So yes, so then, but I said, the ones who have already signed up have the privilege, so we give them the access first. So if you come later, then you might kind of miss the opportunity this month, but then you have again opportunity next month to take part of this product. Step by step, we allow more and more people to use it.
Okay. Well, thank you, Mihkel, for joining me today. And I also want to thank all the viewers and listeners. And as always, thank you for being part of Estateguru's community.